Huishan Dairy was once touted as a shining star in China's dairy sector, a multi-billion-dollar giant that prided itself on its innovative approach to dairy farming and high-quality products. It was a company that seemed destined for greatness, but as we would come to find out, not everything was as it seemed. As the saying goes, pride comes before the fall, and fall it did. In March 2017, Huishan Dairy experienced a spectacular meltdown. Its share price plummeted by a staggering 85% in just 90 minutes, wiping out $4 billion in market value. This event marked the beginning of a tumultuous period for the company, its shareholders, and the broader Chinese dairy industry. But what exactly led to this sudden collapse? How did a company of such magnitude find itself on the brink of bankruptcy overnight? Let's dive in and find out. Like any compelling story, we need to start from the beginning, at the time of Huishan Dairy's rise to prominence. Established in 1951 in China's northeastern Liaoning province, Huishan Dairy initially functioned as a small state-owned dairy farm. But it was under the leadership of Yang Kai, a tycoon who purchased the company in 2003, that Huishan Dairy began its meteoric rise. Yang Kai was a man of vision and ambition. He transformed Huishan Dairy from a modest dairy farm into the largest dairy firm in China. Yang invested heavily in technology and implemented innovative farming techniques to ensure that Huishan Dairy produced milk of the highest quality. By the end of the 2000s, Huishan Dairy was a household name in China, renowned for its premium milk products. In 2013, the company made a grand entrance on the Hong Kong Stock Exchange, raising $1.3 billion in its initial public offering, one of the biggest ever for a Chinese dairy firm. The IPO valued Huishan at $5.6 billion, and its shares were oversubscribed by more than 6 times. Investors were seduced by Huishan's story of robust growth, high-tech farming, and excellent product quality. Yang Kai's strategy was straightforward yet effective. He integrated Huishan's supply chain from the grass the cows ate to the milk cartons on supermarket shelves, achieving maximum efficiency and cost control. The company boasted ownership of a massive herd of more than 250,000 dairy cows and utilized advanced milking robots, making it one of the most technologically advanced dairy companies in the world. The company's remarkable growth narrative was accompanied by a strong emphasis on transparency and integrity. Huishan claimed that its cows were fed on organic feed and that it tested its milk every 2 hours for safety, boasting one of the lowest levels of antibiotics in the industry. Huishan's operations seemed almost too good to be true. By 2016, the company had recorded impressive sales of $1.6 billion and earned a net profit of $340 million, according to its annual report. Investors were thrilled, and its share price climbed steadily. Yang Kai had become one of the richest men in China, and Huishan Dairy appeared unstoppable. However, as we would soon find out, beneath the surface of this seemingly perfect picture of corporate success, darker forces were at play. Red flags were being ignored, auditors were being misled, and the very foundation of Huishan Dairy was built on shaky ground. The cracks would soon begin to show, leading to the eventual unraveling of Huishan Dairy. As we delve deeper into our story, we reach a turning point, the first warning signs of trouble. The year was 2014, and an intriguing report began to circulate among financial circles. The report, authored by Muddy Waters, an investment firm known for its short-selling strategy, sounded the alarm on Huishan Dairy. Muddy Waters, led by their founder, Carson Block, had a reputation for revealing fraudulent activities in companies they investigated, and their reports were taken seriously by investors. Muddy Waters' analysis of Huishan Dairy was scathing. They claimed that Huishan Dairy was overstating its profitability by approximately 1.6 billion yuan, or about $261 million. They accused Huishan of committing fraud by exaggerating its self-sufficiency, faking its expenses, and inflating its sales. Huishan Dairy swiftly denied these allegations, calling them groundless and a ploy by Muddy Waters to manipulate its stock price. Huishan's shares dropped by 5% immediately after the report was published, but quickly recovered, as investors chose to trust the company's rebuttal over Muddy Waters' claims. Then, in 2017, an event occurred that brought the issues raised by Muddy Waters back into the spotlight. On March 24, 2017, Huishan Dairy's stock suddenly plummeted by an astonishing 85% in less than 90 minutes, wiping out $4.1 billion in market value. This drop was the biggest one-day loss in the history of Hong Kong Stock Exchange. The fall was so swift and sudden that trading in Huishan Dairy shares was halted, and the company scrambled to find an explanation. Initially, they blamed miscommunication between the Treasury Department and the Finance Department for the cash flow issues. But this explanation didn't sit well with investors or the financial community. Shortly after the share price collapse, Guy Kuhn, the executive director in charge of Huishan's sales and treasury operations, disappeared. A letter she left behind stated that she had taken a leave of absence due to recent work stress. Guy Kuhn, who was also the wife of Huishan's CEO Yang Kai, would remain missing for months, leaving more questions than answers. The company's fall from grace was brutal. The 90-minute crash left the once great dairy empire in ruins, and the fallout was only just beginning. The layers of deception and manipulation at Huishan Dairy were about to be peeled back, revealing a scandal that rocked China's corporate world and left investors reeling. After understanding the story of Huishan Dairy's fall, it becomes clear that this was not a simple case of a company overstretching its ambitions. Instead, it was a cautionary tale about the perils of unchecked corporate greed, and a stark reminder of the importance of transparency in business. As the dust settled, the subsequent investigation into Huishan Dairy began to unravel a convoluted web of debt and fraud. Remember when Muddy Waters claimed the company had overstated its profitability? Well, it seems they hit the nail on the head. Independent auditors found a gaping hole of 6.6 billion yuan, or about $4 billion in Huishan Dairy's accounts. But the question is, where did all this money go? It seems that a significant portion of the missing funds were linked to Yang Kai and Guy Kuhn, Huishan Dairy's top executives and husband and wife duo. Reports suggested that they were involved in undisclosed transactions, using company funds to pay off their personal debts. The Hong Kong Stock Exchange noted multiple breaches of listing rules, including loans to entities controlled by Yang Kai, as well as inadequate financial controls and corporate governance practices. Yang Kai himself had gone to extreme lengths to maintain a facade of prosperity, even using personal assets to buy Huishan Dairy shares to artificially boost the stock price. When the scandal broke, Yang was reportedly in possession of 73% of Huishan Dairy's stock, a controlling stake worth approximately $2.9 billion. With the company's shares suspended indefinitely, Yang Kai's vast fortune became essentially worthless overnight. The entire debacle sent shockwaves through China's corporate landscape. The People's Bank of China and China's banking regulator quickly ordered banks to check their exposure to Huishan Dairy. Meanwhile, creditors, including Bank of China and Ping An Bank, rushed to the courts to secure their interests. In 2019, the Shenyang Intermediate People's Court announced that Huishan Dairy was officially bankrupt and liquidation processes had commenced. In a classic case of boom to bust, one of China's largest dairy companies was reduced to ashes. In the same year, Huishan Dairy's biggest creditor, Yuxiu Group, a state-owned investment holding company, took over Huishan Dairy for a sum of $453.3 million. For comparison, remember that Huishan Dairy was once valued at around $5.8 billion in its heyday. Yuxiu Group's takeover marked the end of the road for Huishan Dairy, but not for the lessons we can learn from its downfall. The scandal served as a grim reminder of the potential pitfalls in China's corporate sector and the importance of robust corporate governance. It highlighted the urgent need for more stringent regulatory oversight to prevent such catastrophic failures in the future. The Huishan Dairy scandal wasn't just about money. It was a story of greed, deception, and corporate malfeasance that led to the collapse of a company, affecting thousands of employees and shaking investor confidence in China's corporate sector. But anyway, do let us know what you think. Thanks for watching.